Who's interested in hearing how the fiat world is actually transitioning and experimenting with digital currencies themselves? Yeah. Okay, so CBDCs are not something that is just a weird phantom of our imaginations. These things are happening today. And central banks across the world are experimenting with different types and versions of CBDCs. And today, on this panel, we have a very amazing panelists here to discuss basically what will the first UK digital sterling look like. So I would like to invite to the stage Dr. Ruth Renhofer, Cash Buchardi, Oliver Aarons, Anders Olofsson, and Amit Sharma to discuss the myths, the truths, and the views on the future of UK's CBDC pilot. A warm applause. Thank you. Enjoy.
Thank you very much, and so nice to see you all here. This is the last panel of the day on this stage in this conference in 2022. Welcome to a fabulous panel here with me. And what we're going to talk about is actually not cryptocurrencies, not really CBDCs. We're going to talk about stable coins and how the industry is getting together to experiment, to target much more use cases and accelerate the digital payment transformation to the benefit of the users and financial inclusion. So I've got a whole group of people here, and we will start the conversation with Kai from Boston Consulting to set a little bit the scene about this UK pilot and where we're at the moment. Thank you, Kai.
Thank you. I hope that works. Does it? Yeah. Now it works. Perfect. So I would like to give you an introduction about the Project New Era, more on the specifics. We had it in the main panel on the other side of the venue here already. It's about a consortium of different companies, especially fintech companies, but also pure tech companies. And what we do is setting up the infrastructure for a digital sterling, which is a quasi-CBDC. We also have additional partners from Simmons & Simmons, Rosa Antrobini, Payment Association, and also Fairground Group. This is all to select and define this platform to be an input for the whole discussion, including the regulators, to how a proper CBDC could look like in the future. Now, what do we want to do with this? On the one hand side, we want to build the platform as such in order to really have a fundament where we can build use cases on top of it. Second, we want to ensure that by using pilots and use cases on the pilot, in what way are the benefits that are all discussed in papers and so on are real. And last but not least, we want to give, with the data we receive from these pilots, we want to give input to the conversation with the regulators as such. So not any more paperwork, but real data from the pilots. We have defined key requirements and key capabilities that such a platform for CBDC would need. It's going from scalability up to privacy questions. And with a platform which we have built in a very modular approach with not only one company, no, but in a best of breed setup, that we really use the best capabilities and technologies from different fintech partners, that it is a very sophisticated platform which can enable exactly these requirements. Now we want to use very specific use cases and customer journeys to put on the platform and really test if the benefits are happening. We used three main design criteria or evaluation criteria for selecting these use cases. One was, let's use a use case which can really showcase a clear benefit to the public, where a CBDC really make a difference. Second, we want to use a use case where the platform design can be really tested at heart. And third, which of these use cases do we really need in order to give input to the regulation so that the regulator questions can be answered? Right? From a long list, this is the first proposal we have come up with. Again, with the different partners in the consortium we are building, this will be further refined and then finalized. Back to you.
Thank you, Kai. I mean, we've really come a long way if we think about the years of early days of Bitcoin and the specifics of private cryptocurrencies. We know that a number of countries are rolling out their CBDCs as national legal tender and central bank money. But what we thought about here is much more how do we mobilize commercial money in new digital ways with a platform approach. This is no longer just about payments and making payments cheap and easy and fast, but this is really about things like how do you get a loan, how you enter an ecosystem, provide a digital identity to someone, self-identify with your data flow on your financial activity to, for example, get a loan approved very quickly. Or equally, financial eligibility, something that is becoming more and more important in our days and time. So thank you for that scene setting. Now, just to follow on from that start, how do you think this digital sterling pilot is different about, sort of this initiative is different to things we've seen in other markets, whether they're private cryptos, central bank money, or pegged central bank money variants such as this one?
So on the one hand side, it is a very modular platform, which is really taking the best of breed approach into account. And second, it's really about taking a partnership approach with different specialized fintechs, with also incumbent players like banks, with also a tight collaboration of different regulators. So really in a public-private partnership setup. And I think this is quite different from many of the other initiatives we have seen.
And it really delivers the idea of an innovation platform, which is something that central banks themselves are also contemplating. And as we know, sometimes central banks and regulators take a long time, whilst the industry can do this much faster, right? And we need to act now. Well, let's move on to Anders from Finastra. I mean, Finastra is one of the businesses that has joined this consortium. What is sort of your perspective as a large fintech player? Why are you seeking to join and participate in this pilot?
So first of all, we serve Lloyds, Barclays, Citi, and HSBC, and are the largest payment technology company in the world. So it's natural for us to be basically where the action happens, Ruth. We also started already 5 years back. We did a POC with one of the major Dutch banks here, where we had a multi-chain doing a transaction between Europe, i.e. Amsterdam, and Sydney. So we've been following this space and also listening to the different presentations and panels over this course of this week. I think that the capabilities that a DLT-based currency, whether it's stable or crypto, the opportunity it yields combines everything we talked about when it comes to open banking and banking as a service. It combines the capability of cross-border payments. It addresses also other topics like security. So it kind of morphs all these topics that we covered over this week into that could be addressed with this pilot. And I think that I pay a lot of interest, and we invest heavily in something called payment orchestration. So with the existing legacy infrastructure for clearing, especially in real time, we see that how the need for orchestration is increasing for banks to be able to monetize their payments. And I think that for me, one of the major benefits is that since we are moving into a digitalized world where the physical supply chain is getting represented into a digital format, that gives a great opportunity for banks as well to start monetizing their solutions in a new way and a more digital way. So to that extent, yes, adding a digital payment to that value chain is very logical. So we're extremely excited about this consortium and what it may yield. I think that most of us are in it to learn, but also looking beyond. My main interest is that what we're going to do, because I'm assuming this is going to be a success. We'll ensure it's going to be a success, but how are we going to be developing new use cases beyond the ones that we listed? I mean, I pay interest to the interoperability, not only for existing infrastructure, but also for the cross-border capabilities. But also, we have other areas that we cover. How can we combine it into the trade finance or supply chain financing, especially from a corporate perspective? Even though this is a retail CBDC, it also addresses the corporate needs.
That is very helpful, and great to see that you've been already in that space for so long and you see how the market is evolving around it. Now, coming back to Kai, just because you mentioned the use cases, can you give us some examples of use cases on your radar right now? We've seen the high-level ones, so that the audience has a bit of a tangible feel as to what's different to what we have today.
Yeah, one is, I would say, the base use case for many innovation parts, which is the moment you receive your package from a maybe very small e-commerce player, and you like the product they offer, but you don't know actually if they're super secure and safe and honest when you pay the product before you receive it. So you can put on the smart contract that you only pay when you receive the delivery at your house door and you sign it at your DHL or logistics provider, right? It's locked. The money is locked in your wallet, but it's only released when you actually sign it. So the trigger is the oracle as such. This kind of programmability is typical for digital sterling or smart contracts on stable coins. And in normal infrastructure today, you don't have that. Right? So this is a baseline, and we believe that there are many innovation out in the market in the private sector and beyond, which can build on top of this base programmability as such.
Well, it's nice to hear, because people talked a lot about smart contracts not being so smart and how do you really program. So having something that actually works in a very confined space and proving that case, I think is very exciting. Now, Amit, Finclusive Capital, what are you doing? Because you obviously have a very keen interest as well in this project. Can you give us a few words on that first?
Sure. Thank you for the question. You can see from our name, Finclusive, our true north, our mission is financial inclusion. And we take a unique approach because one of the things that's common along the use cases that Kai talked about, the interoperability and both retail, corporate, and wholesale uses that Anders talked about is compliance and ensuring that there's an equitable playing field for enabling individuals, households, small businesses to large corporates to get into financial services and do so in not only an interoperable way, a programmable way, but also a compliant way. So that's our core, is that we provide what's called compliance as a service, which is effectively an ecosystem, a global ecosystem and full stack approach to compliance to do know your customer, know your business, et cetera. But on top of that, we provide an ability to assign digital identity credentials backed by that compliance to ensure that there's a utility in the ecosystem. And so that equitable access enables an individual or a household or small business to not only be tagged to a wallet, tagged to a contract or a transaction that then can verify and validate in an automated way the owner of that wallet. The ability to do KYC automation, the ability to actually share that digital identity credential across the ecosystem. If we do that well, equitable access becomes enabled in ways that individuals can receive a stimulus check from a government, can send a peer-to-peer payment between two wallets, can link their financial account at a deposit institution to a digital currency transaction, because the commonality of all the anti-money laundering elements out there is, do you know who you're dealing with? Period. And so automating and providing that capability with digital identity credentials is the core of our compliance solution. And then the second piece is, how do you then enable that connectivity to fiat banking, right? To transactions in the fiat transaction world. That's what we do.
And so your role in the pilot?
Our role in the pilot is to provide that compliance layer and the KYC, KYB, and digital identity-backed compliance credentials in the ecosystem so that there's a common framework, both from a policy and technology perspective, as an ecosystem for regulatory compliance. And because many of us at Finclusive are also ex-regulators, making sure that the policy framework meeting the risk and compliance objectives are equal and part and parcel to how we build an interoperable solution that links CBDC issuance and usage with traditional banking and fiat systems.
Yeah. So it's the interoperability with existing systems, it's following the rules of the law for identification. And I think what is really interesting here is that we're starting to see a platform approach where we really pick best-in-class solutions to make sure that we have an ecosystem that strives at that evolving layer, because we do know ID verification providers and many others, and they are all evolving themselves in terms of how they use technology. Now, what is really important is this straddling of the old financial world and the new one. And we're seeing not yet many players that can bridge both worlds. So this pilot is a great example with Inclusive doing exactly that, because we are in a sort of technologically different form of money. It's still commercial bank money. It will ultimately settle in central bank money with the omnibus account connection at the Bank of England, but it is something that is technologically different and therefore requires the digital identity and the wallet capability, which is very different to my £10 in my purse today, right?
Absolutely, and given the technological and operating infrastructure that is fundamentally different in this environment, you have to have that bridge. The commonality for us is ensuring that the regulatory compliance, know your customer, digital identity solutions are part of and embedded in that infrastructure, rather than what the old model has been with traditional institutions as a bolt-on, right? You have anti-money laundering and KYC controls as a bolt-on, and to your point earlier, even anti-money laundering and know your customer requires an ecosystem. There are providers for identity verification, document verification, sanctions and global watch list screening, transaction monitoring, and the average institution, whether it's a global fintech, a big corporate player, a small credit union, has to piecemeal all of these solutions, and it ends up costing 30+% of their operating budget.
Yeah.
So the whole idea is to create it with efficiency, with a standard of approach, and one that marries the policy approaches for security and safety of compliance into the ecosystem.
So actually thinking about it in this way, this is actually a great first example of providing such a platform ecosystem where everybody in the future may connect exactly to get either a selection or full stack of the services. Because I see it, I mean, I work with an FX provider, we engineered all the onboarding, digital data, everything, but we had to work with so many external vendors, piece everything together. And of course, if you want to stay agile, and if one of your vendors is no longer that good, it's very hard to pluck them out and plug something else in. So I think that comes back to the innovation platform that I mentioned at the beginning, right? Perfect. Now, talking about law, we've got a lawyer with us, Oliver. Welcome. Now, just as a quick reminder, we saw this beautiful meltdown of algorithmic stablecoins recently, which I kind of call Emperor's New Clothes, because they were not regulated as e-money, right? CBDC, if it's central bank issued, is of course central bank money, highly regulated as such. Here we're talking about a digital sterling as a commercial bank money digital variant settled in central bank money. Would you just talk us through a little bit about the regulatory concerns the market has, the things that are still missing, and how we are supposed to understand the digital sterling in that regard?
Sure.
Please.
I mean, at the moment, and it's probably worth just sort of stating the obvious, is that what we've got here is you've got as a distinction between cryptocurrencies, which are sort of unbacked and just effectively unregulated investments. Then you've got digital currencies like de-sterling and the New Era pilot that will be coming through, that will start as effectively a fiat-backed stablecoin. So it will be backed by fiat held at commercial banks, moving to a synthetic CBDC with backing by central bank money, and then on to, you know, how it might look to actually launch an actual CBDC with the UK government. As things currently stand, digital currencies basically fall into two categories. It's either a privately issued coin, privately issued stable coin, and in this case, we're talking about fiat-backed stablecoin or CBDC. The regulatory framework already effectively exists for fiat-backed stablecoin as an e-money token, certainly in the UK and the EU. And in that context, you will need to, you know, you'll have issues around how that will work in practice. So the HM Treasury consultation response that came out earlier this year has basically said that they're going to take the e-money regulatory framework and modify it to enable specific payment-specific stable coins to be operated. Now, there are lots of concerns around exactly how that will work, so mostly around how it will be backed, because of course with e-money you have to safeguard the funds if you're a non-bank issuer of e-money, so there's a distinction between how banks will be treated and how EMIs will be treated in the space. And there are other issues around liability. So what we're seeing at the moment, and I think the main sort of regulatory bits that people think are missing, is really how you make the peg of the stable coin stronger. And there are a couple of things that I think that have really sort of come out recently. So the first one is obviously most of the stable coins we've seen so far aren't truly stable. So we've seen the fluctuation even in USDC and things like that. So what we're looking for really is, well, the reason for the fluctuation, the volatility in them, is that they're effectively exchange traded and they're subject to speculation on the extent and the credibility of the backing that's in place with them. So if you've got a stable coin that is fundamentally not stable, you've sold it to someone on the basis that it's pegged, you will get your pound or your dollar back. It ceases to be a reliable form of payment, and it's exposing customers to loss in a situation where they were led to believe they would get their pound back, or they would still be worth a pound or a dollar. And the other risk that we've got is in relation to counterparty risk. So if you take USDC, for instance, Circle will issue the coin. It's then passed through distributors. So you're putting sort of people in between the issuer and the owner of the coin. As an average punter, if you want to get your dollar back, you have to go through an exchange to do it. You don't go directly to Circle and get your money. And I think that's another one of the major issues that certainly the pilot will hopefully help to flush out and sort of rectify, and we'll work out exactly how to make sure that liability sits with the issuer. And I know that there are proposals in MiCA where there'll be a direct obligation on the issuer to redeem at par with no fees, which is one of the ways in which they're looking to sort of really strengthen the peg and make it an effective form of stablecoin.
Excellent. So you mentioned MiCA. I mean, there have been some voices that said it would have been better just to reapply e-money rules with that expansion, which is what the UK is doing, expanding the scope, as opposed to setting a whole new framework, which in some ways is potentially lighter than what we might want to see if we think about the investment silo of cryptos such as MiFID and cryptocurrencies, right? Now, in terms of the issues that regulators are anticipating with CBDC use cases, do you see some examples where this pilot could help? I mean, you did mention the e-money rules and the fact that we will be operating fiat-backed e-money in a way that ultimately is settled by central bank money, so we have a backstop on the risk, and in terms of if any party defaults in the chain, we would not touch this money because it would be ring-fenced and settled in central bank money. Are there any other regulatory pieces that you think could be tested in terms of also how we evolve regulation in that space?
Yeah, I mean, we've touched on things like KYC already and transparency when it comes to the actual transactions that are being made. We've
It's
also
a very timely noise.
Yeah. But it was also, when you're talking about CBDCs, we're talking about where the liabilities will sit. So one of the proposals I think the UK government have come up with is that they will create a new category of regulated activity that catches the custodian of the stable coin. So that will be brought within the scope of regulation, and it will just tighten up the framework. So I mean, there are lots of things that I hope will be flushed out by this, but yeah.
And it's a great test environment to test regulatory ideas that we could then share with regulators as to how they should maybe approach this going forward, right?
100%.
Yes.
And I would just add that in the same way that you see the amazing innovation happening in payments, in tokenized value, issuance, payments, interoperability, and programmability, regulatory frameworks need to equally be modernized.
Yeah.
And not only to catch up, but to also provide an enabling environment. And too often, having been a regulator myself, too often we go to, here are all the risks of X, Y, and Z, and we too few times say, here are all the risks of not trying. And with an inclusion mandate that is built into this pilot, where you have 3+ billion people on the planet don't have access to basic financial services, tens of millions of small businesses that, by way of lack of identity to lack of credit history or engagement in the traditional financial services environment, the digitization and tokenization of value provides awesome opportunity for inclusion. And if we can embed modernized approaches to efficient regulatory compliance measures that preserve privacy and enable interoperability, we will win.
Got the answer, yeah. Yeah.
Yeah, I think that's exactly the reason why we would like to set up this private-public partnership, that we also have a very active and frequent discussion and alignment and exchange of information and thoughts on where we can, in the platform, embed what the regulator is asking for, but also that we can give them back some information or ideas, what we have seen, what works or what potentially didn't.
Yeah, with the feedback loop, absolutely.
Absolutely.
And that's why when I said at the beginning, it's having that leadership in the private space allows us to do things a little bit faster because we are sandboxing it. We're not doing ultimately the live thing just yet, but we keep the regulator appraised as to how things are going. Just to end on the financial inclusion point briefly, from my perspective, chairing the independent panel of the payment systems regulator in the UK, this is one of the key elements where we recently published a digital payment report because we don't have everybody in the digital payment economy. We have people still being dependent on cash. Sometimes it's an affordability issue, it's a network issue. There are a number of things that need to be resolved to allow everybody to participate. But if we're making it easier and cheaper and more inclusive for people to share data and prove that they are worthy and can get a credit and can get a loan in a different way to the traditional way of banking, that's exactly where the potential lies, because you could just multiply this by millions for all the millions and billions underbanked in the world, right?
I think that's exactly right. And one of the things that we have failed to do when we think about the regulatory and financial enforcement landscape is that we have created a false binary choice of an inclusive economy or a safe and secure economy.
Yeah.
And they are part and parcel of the same coin. And we now have technology applications that can do both.
Exactly.
And by doing so in a way that brings modernized regulatory to the frame, we would argue that an inclusive economy leads to a much more secure, economically secure national security, international security environment. The tokenized value space has been around for a while. The ability now to do so with embedded infrastructure that brings in modernized regulatory compliance tools for KYC, KYB, digital identity credentials in the space that links a wallet to a fiat account and traditional banking, that's why interoperability matters. And doing so in this environment, this is the first ecosystem approach, true ecosystem approach that I've seen and excited to be part of it.
Yeah, great. Now coming back to Anders, you mentioned, the banks also want a piece of the pie. It's everybody thought initially when we talked about CBDC, we end up in narrow banking. Everybody will take their deposits out and rush into CBDC. But you also gave the example of supply chain. Can you just give us a little bit around how you see supply chain being actually modernized in that way?
So I think that the supply chain itself is getting quickly modernized by itself, with or without a CBDC. And we've seen in the area of trade finance, as an example, we have the Marco Polo platform, which is doing a lot in this space. But as the economy, as I said initially, is getting so increasingly digitalized, it's almost like we create a huge number of digital events in our life. Even me going to the gym with my Garmin watch creates digital events that could be captured into platforms. And I think that having that platform and part of an ecosystem where value in different shape and forms, value could theoretically be kindness or loyalty.
Yeah.
That could be a store of value. And having that a platform eventually going to be monetized in something we think we can use for purchases. And I see that trend where we are already now in the existing legacy payment infrastructure trying to integrate, and we see in banking as a service during the attempt, and having these events being captured eventually to made into financial products. And that is where I think that a DLT-based platform similar to what we are creating gets a great opportunity to test those use cases, and even beyond the use cases that we highlighted as part of the pilot and the consortium. So you see, I could as well say factoring as an example could be modernized by having the smart contract that Kai referred to and have stipulated terms and conditions. We've seen pilots already in this space, but I think that also trying to create somewhat of an industry standard and industry adoption, I think that we could generate additional value to the community and more efficient solutions.
Yeah. And maybe just to end on this, I think the opportunity of using the data that we create about ourselves and that others create about ourselves to the benefit of supporting the right values, ethical behavior, kindness, loyalty, inclusion, support, and a better redistribution would be actually something that this could finally facilitate, which is very, very close to my heart. Now, just ending on Kai, I mean, this sounds like this is going to be the place where the action is going to happen this year, 2022. And I'm sure that more people would want to know about this consortium and potentially join it. Is there anything as a last message you would want to shout out, given that we're really now starting the action, right?
Yeah, so we are building up the consortium right now. We're starting to launch the pilot, so really program the pilot on top of the platform roughly September, October, and then we assume, based on the different use cases, it will take another 12 to 18 months to actually, one by one, implement them, get the data out of it, share it back, and conclude on these. So if there anyone else to join the consortium, reach out. We will have a website up and running. We'll also have dedicated events and so on. All of that is available, and then we are more than happy to increase our consortium for sure.
Perfect. We're good to go. So please say a big clap to our fabulous panel, Kai, Anders, Amit, and Oliver. And please find out more about the work of the consortium, because I think it could truly make a real difference, and we need more people to join to make it a big platform with a big success. Enjoy the rest of Money 2020.